7, 6, 5, 4, 3, 2, 1. Event has occurred.
EX, short, midpoint reversal, short midpoint reversal.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile, and it is based on structured trades, and these are available to everyone at no cost in the Bookmap Discord Trader Lab. You can access this. There's a link in the bottom of YouTube. Also, you can visit bookmap.com and access the education. This education is available to everyone, including if you're a subscriber to Bookmap, there's coaching and mentoring, the Bookmap Academy. There's free Bookmap available to those who participate in the Bookmap Academy, and free add-ons and a lot of other things and contests and a lot going on. So you guys should always be checking bookmap.com. Also, I'm going to be mentioning today that if you haven't confirmed your subscription, you need to do so. If you're in Discord and you have a Bookmap subscription, there's going to be special webinars and events for subscribers that will be coming. Plus, I will be doing live narration specifically in the Bookmap Discord Trader Lab community. This is still being developed, but it is coming very soon. So if you're a subscriber and you want to participate in these, now's the time to verify your account. Let me put that up here, and then we can go from there. Actually, I'm going to do this first, take care of business. And we're still sitting on the short side. We'll talk about that today. General disclosure, all Bookmap Limited materials, information, and presentations for educational purposes only, and should not be considered specific investment advice or recommendations. Hey, hold on. The target that's alerting here, just so you know. Okay, sorry. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is about helping traders understand the business of trading. It is built on process, not prediction. The thing about trading is that if you think of it as a business, you will then approach it with a consistent approach, not making it up. If you treat it as a video game, then you're going to continually be putting whatever it costs into the slot, like a slot machine. And that might be fun, but it might not be a solution for a career in this business if that's what your objective is. Now, a lot of folks come into trading and they're really just coming here for a good time, and then they wonder why they don't succeed. Trader Lab is built on the idea that almost anyone can learn how to trade if they do the work. But then again, actually doing it is another element. Not only the work, but actually managing your emotional state and being able to hold a number of different elements in your mind at the same time. Now, what does that mean? Well, let's go into that. And that's what the purpose of the Trader Lab is. And I appreciate you visiting in YouTube today. And don't forget, there is the link in the bottom if you're interested in visiting the Bookmap Discord. Trader Lab, and there's no cost for that. So, one other thing, and this is what we need to take care of. This is very important for those of you who are Bookmap subscribers. If you're a subscriber to Bookmap, and if you don't have an email matched and you need to confirm these, so you have a different email from your Discord login and your Bookmap login for your subscription, these need to be aligned in order to, of course, unlock free add-ons and early beta testing if you're interested in that. Also, there's going to be these exclusive webinars, and this will be starting shortly, possibly next week. And if you're not a subscriber, then you will not be able to attend these. So I think it's really important. By the way, those of you who are not subscribers, you might not be aware of this, but if you're visiting in YouTube, there is a free subscription. I wonder if you knew that. There's a free subscription. Now, I'm not here, I don't sell subscriptions, but I have to say there's a lot of traders who wish that they had access to a tool like Bookmap. And then, we all want to get our hands on something. But there's a free digital version of this that comes with data, and you can play around with it, but then also attend these special streams and webinars that are going to be exclusively for Bookmap subscribers. And considering a subscription is free, if you're interested in checking it out, I think that would be pretty nice. But and a lot of this is going to be happening in the Bookmap Discord Trader Lab or in other areas on the Bookmap server. But I will be doing special streams, real-time streams in the Discord server. So if you're interested in what you see here and what you have been following, and if you follow me on YouTube and all the other tools that I've shared, plus the tools that are available exclusively to Bookmap Discord Trader Lab participants, library of webinars, statistics, and structured trades, and more, you might want to check it out. And that's my invitation to you. Hope you guys get something out of this. And now let's get into today. Try to get things rolling here. Okay. Now, before the market opens, we have to do some things. What are they? We have to look at the condition of the market. Now, this is based on auction market theory. And what is this all about, auction market theory? It's shopping, and it's also valuation. The purpose of the market is figure out what something is worth. And there's times when the market goes to an extreme and it gets either too high or too low. That's outside edges, if you will, too high, too low. And then there's other times when the market's kind of sitting in the middle, and we call that, the term is balance. And all balance means is in different time frames or fractals that the market has high volume. This is called a microcomposite volume point of control. Let me just tell you what it means. It means in the current consolidation that we've been sitting in, this is where the highest volume is located. And what the market tends to do is it'll go outside somewhere, and if this is the high volume, come back to it. Think of it like your store. If the price gets too high, you run out of buyers, and then you come back. If the sellers want to sell it, it comes back to retail. If it goes on sale, it can come back to retail. And that's kind of what happens. Now, when does a price change? A price changes when the buyers and or sellers, but let's say one side is either not willing to sell it and the buyers have to, the price goes up and the buyers have to pay up for it, or the sellers, I should say the buyers are not willing to pay for it and the sellers have to lower the price. So if the buyers are interested, the sellers can raise the price and so forth. And then if the sellers raise the price and the buyers won't pay it, it creates our consolidations. So in a higher time frame, this is retail. In yesterday's developing daily time frame, so we're going down in time now, like you guys think of time frames, this was the retail price. So yesterday, this was the highest volume. Now, different days have different locations of this high volume, but we're opening right here. This is saying there's agreement in the market on a fair price. Now, there's one other piece, and you'll kind of see how this fits together. This is the ETH volume point of control. So it's the same as that from yesterday. This is the ETH retail price, most recent auction. This is the intermediate time frame. This is balance. Now, when the market is in balance, we anticipate two-sided trade. And I'm laying out the picture before the market opens. Now, where is settlement? I'm going to take you. Settlement is here, RTH open. Now, grab your pen and paper. I'm going to give you some statistics. And past performance not indicative of future results. This is available in TraderLab. We are opening lower, that's where we settled, inside of yesterday's range. Yesterday's range, yesterday's high, and yesterday's low somewhere, wherever it is, down somewhere. Yesterday's low. So you see it, right? Now there's some other pieces in here, but I'm going to give you the stats and then I'm going to move on. This is how TraderLab process. And there's all I am doing and all I share in TraderLab is how can we create a statistical edge? How can we look at the probabilities of one behavior over another? How can we get in alignment? And if we get in alignment, do we have probabilities that we can use to enhance a potential outcome or edge? This is trading, not predicting. It is more like gaming. So the overnight volume point of control, now we're opening here, so this is not a reach. Opening there. Now, the point about these statistics is it's not what will happen. And it's about not the range, it's the statistics. If this was 12 points away, the statistic under these conditions will still be valid. So range is a variable, but statistics are over a large sample size. So I just want you to understand. Overnight volume point of control, retail price, highest volume from the ETH, 83% probability we get there. You're going, that's nice. The naked volume point of control, highest volume from yesterday's RTH, 70% probability. You're going to say, well, why should I care about that? It's telling us the condition. Overnight mid, 83% probability. Now, write these down if you're not writing. Stay conscious. They're to take out either the ETH high or low, write this down, is a 93% probability. Taking out the first hours, it's called the IB or initial balance. First hour high or low is 98%-ish probability. Pretty nice, huh? Taking out the overnight low, 66% probability. Taking out the overnight high, individually now, 49% probability. Taking out the previous high, 40% probability. Taking out the previous low, 53%. And there's some more, but I think this will get us going. Now, let's keep going. So, now, RTH open. I hope you guys are with me. Now, if you have questions, please post them.
Absorption higher, volume 126.
Okay, RTH open. Now, let's come back to the hypothesis for today. Two-sided trade. Remember, this is important. Now, I'm going to show you structured trades in the TraderLab, and you can all download these. There's 60 PDFs. However, now what I do, I want to make a point, is not necessarily what anybody should do. There's no right way to trade. The thing about TraderLab is we need, in my opinion, create a trade plan that aligns with our psychology. Let Let me see what's going on over here. Just want to make sure I got this. Okay. So we have settlement. This is an important level. And we have, let's go further, yesterday's high and the ETH high. So it's possible we can go here, right? Or we can go down. And where are we opening? At a fair price. So what I posted in Trader Lab, and I have to tell you, I have no monopoly on right or wrong. Nobody has that. If you think it's about being right, it is not. I know we want to be right, but that has nothing to do with the business. You know, the approval, the feeling, yeah, I know what I'm doing. And it's like getting a pat on the back and a thumb up, or getting the little gold star on your forehead when you're a kid. We're all taught for that. This doesn't apply here. So our emotional needs, which we wrap around what we do, have nothing to do with this business. And actually, the challenge for us is to actually differentiate. So overnight volume point of control, fairest price in the last auction, right there. Okay. So what do I know? If I open and test this, I can bounce off it and come here. Now, this is Trader Lab structured trade. Now, this is a trade, but here's the other piece about this. What's below me? This is a fractal of this. And I know you're going to find it probably a bit disorienting because I'm talking in multiple time frames. It's like you guys think multiple time frames, but I'm doing the same exact thing. I'm doing it with volume. So let's look. This was, I think, an 82% probability. I'm not looking at my stats. You wrote them down, right? I know this is balance or the highest volume retail in the intermediate time frame. I know from yesterday this was the retail price, and it has about a 70% probability, and I know I can test the settlement and go higher. That's what I know. So this is what I know. And I'm anticipating two-sided trade. What I don't know and will never know ever is where the high of anything is or the low. I do not know. But what I do know, let's talk about when I say I mean if you're in Trader Lab, what you know. And if you're a developing trader, you may not know it now because there's a lot of pieces. You know what to anticipate, you know where it might happen, and you know what you will do if you have a structured trade that you've vetted. I'm still holding a short here, and that doesn't matter. So I got to look over and just manage the store. So I hope you guys are okay with it. There is an extended target below us, and it's not a trade recommendation. I'm going to mention it to you at the moment. It's around 55.96-ish. And that's not a recommendation. It's just what it is. And I'll show you that on the price map, which I haven't been able to do. I'm going to show you this first. So RTH open, test high probability statistic. This is called developing volume point of control. This yellow line is the same as this, but if it finished in the ETH, it's the same as this, except this is a higher time frame. It's the same as that, except it's left over from yesterday. So what this yellow line is representing is all the development, the change intraday of volume or behavior, and these are static now because they're leftovers from the previous auctions. And this one represents the whole consolidation. So if I'm opening right in balance, I anticipate return somewhere or not because it's dynamic, you know. So first trade, test. Now, this is a potential Trader Lab long. I did not take this trade. I'm just going to, and I didn't because as soon as it got away from me, I don't take a trade. I just go out. Now, I have what's called VPOC migration. I have VPOC migration here. This is a long. Now, we're in 2 seconds, okay? And it breaks high. Everything's telling me we are going here. The problem I have for this trade, for me, was I did not get it here, so I did not take the trade. The reason was this right here is my target to scale. Now, if I got in over here, I'd be okay for the range, you see. But I have in my trade plan, even though I have a trade, I can't take it. So I just sit there and go, you shoulda, right? Now this, if my targets were further away, would be I could initiate here. But I have this. I cannot initiate. So I'm just telling you, I'm just sort of sitting here like a deer in the headlights going, you shoulda. You ever have that thought? You shoulda. Settlement is here. Now, right here, and I don't know where it's going. I mean, it's going up, right? So brilliant. But what do I know? What do I know? This is balance. And I don't know where the high is. Right up here, I see my buyers. Hold on a second here. Right here, I see my buyers. Everything's looking good. Right up here, I see micro high volume looking good. Now I see a seller. Now the thing becomes right here, are we going to keep going? Now I have no clue. Don't forget, I don't have a long. If I had a long, I have to be looking at the following. As we move higher, I'm looking at the high volume, this, that's in here. This microstructure, as I call it, or high volume, is a fractal of this. So think of it this way. Too low, this is like a retail price. Too low, as we consolidate, so this is moving higher. In here is also moving higher. I'm down in a shorter time frame as you think of them. I think of them as fractals. It's not regulated by the clock. Here's a microstructure, too low. I'm breaking high. And what am I looking for? This. What happens here? I get the opposite. Now where's resistance? Well, potentially it's here. I don't know. So I have support here. Now I have resistance here. Now I don't know again. And support here. So I can use these structures for trade management, or I just have my stop down under here and I go, let the chips fall where they may. And the illusion, of course, is chips. Now, VWAP, where's resistance? It is there. I get my buyer here. So I have buyers. Let me take you into the order flow. Nothing up here. Sellers take over here. So this is resistance. Let me just draw a little box for you. Once I draw a couple of these, you'll know what I'm talking about if you haven't seen this before. This is where the sellers took over. This is where they tested back. Where's my buyers? I got a buyer here. These sellers were absorbed at the VWAP. That creates this. Now, right here is my resistance. I get my buyer here. Now, what do I know? Buyers are here. Exhaustion up here, maybe. Micro high volume, too high. Sellers take over. And I had the sell iceberg too. Sellers take over. Sellers having a wonderful time. Sellers, only 10 stops come out. VWAP, sellers, going to zero, Lewis. And what happens? I get my buyers at VWAP. This is typical retail trader behavior. Now, why wouldn't I take a long? Because of this. And where's the opening swing low? Here. What's under the opening swing low? Sell stops, right? And what's over this? This is going to be my opening swing high because I only had one direction. So stops are piled here. Make a note of that. You need to be conscious because who's ever in this leg, if they are wrong, and the buyers from here, if they are wrong, stops are going to be here, here. This was the last retail price. This is also support. If we take this out and we can't get back, hasta la vista. Now there's more. And there's support here, and the swing is here. This is important. Opening swing low. I'm actually going to mark it. And what happens to me is if I don't mark things, I get myopic. I forget. Human. Forget. I come back here. My buyers take a shot. My sellers took over in here. Delta. Test. Can't get back into this right here. It's a problem. Now, I break. Let's just watch the structure. Where's the volume? Where's the volume? It's here. It's here. It's here. So this is the high volume, and there's the sellers. This is a micro consolidation. I get my mechanical retail buyers at the VWAP. I get the VPOC migration. Now, there's two pieces here. This now is the retail price. This is too low. Let's mark it. Variable high volume node. I made these terms up, but that's okay. I want to keep track of the change. So this is too low. Down here is too low. Let me put it in here. I don't want to get sloppy. So I'm tracking, and right now it says it's going up, right? Still going south here. Come on. So what this says too low, but this says too high. So I have micro saying too high. I've got VWAP buyers here. I test the outside edge of this consolidation. Too high. I break under. This shifts up. Now this is complicated, right? This says potentially going higher. And right here, I don't know. I test this. If I clear this, going north. If I don't clear this, and I get my buyers here. Now remember what happened over here. I have a sweep and I have buyers up here. They exhausted. So what happens? Sellers, these guys are getting absorbed. There's the icebergs. Let's just watch some more. I come up to my resistance coming from here. My buyers, only one buy stop. Really? And then what happens here? Icebergs selling. This is how the stop and iceberg detector is helpful. And location. This is now at this point, it is, what do you do with this? Is it a short? For me, no. And I'm not long. Remember, if I was in the trade, I'm looking at this and I'm going, we got a problem, maybe. And I want it to push off and get through here. When I see this iceberg and I see the other absorption up here, and that's what they're doing. When you see a delta with the green bubble and you're not going anywhere, why is that? It's because there's always two sides. There's the aggressors, which is represented in the bubble, delta, and delta is aggressors and stops. Stops become market orders. They are part of delta. They're considered aggressors. If we don't go up when we see an aggressor, it's because there's another participant in here you can't see. It's the limit order book, and it's these guys. And these are limits. And they're putting them out here, and they're going. Okay? They can also execute market orders, too, but they got to show. If they're operating as a iceberg, they've got to show their orders. And they also get ahead in the queue, so they get a benefit for that also. They get ahead of us. They pay for that, but neither here nor there. So there's my icebergs, there's my selling, there's my buyer, here's my location. All of it comes together. Now, I break low. This yellow line becomes resistance. So I have resistance here, I have resistance here. I break low. This is trouble in River City for the longs. I pull back here. This is now resistance. I'm going to label it, by the way. And I want you to see now how the auction works. And it's different, I know, than what you're used to seeing because you're probably using indicators. There's nothing wrong with that unless it doesn't work for you. I break low. So this was support. I break under it. I check the VWAP from here. Let's see what we know. Too high, too high. Remember, broke, checked. Once this gets rejected, now this is a strong suspect because of the icebergs. Now we break below. I have my long sitting here, under the mid, and under the opening swing low, right? So we all know that already. Once this happens, problem in River City. Break low. I'm now under here. I took out the mid. There's a trouble. I pull back the VWAP. Now what? You have choices. This is a potential short. This is a potential short. Let's watch. And where's the stops? Opening swing low. So we want to get the stops out. There's more. Now, we go into something called balance. Now, when in this, and we had quite a lively conversation, and this is my target now, ETH low. Now, remember, the ETH low, there's a probability, 93% probability we take out either the ETH high or low. Considering we failed up at the top, and we are also going to have potentially, if we don't come back and take this out, which of course is always possible, then I also have, for the first hour high or low, 97% probability. Here's the other piece. You're saying there's more? Yes. I am below yesterday's settlement. I did not get to the ETH high. Okay. I'm under what was the retail price from yesterday. In the developing time frame, I'm under this. I'm under this. I've taken out the opening swing low, and now this is my retail in a higher time frame, and I'm looking for this. And that's as far as I go, by the way, with my brain. This is another target down here. It is a version of this where we were previously as the value is moving higher. If we take this out, this is the next target down after this. And there's more. This is another target, 20, which I posted in Trader Lab. And there's one more, this. This is also posted in Trader Lab. What is this? Naked volume point of control. What was this? Yesterday's naked volume point of control. Retail for the full RTH. Now, the reason they're called naked is they haven't been tested. And think of this like shopping. If we fall out of an area, and this, by the way, is balance in an intermediate time frame. If I get under here and get rolling, I've got these levels below as targets, and I got this. This is my next target down here. And for me, this is where, the objective is for the day, not a recommendation. Now I'm going to come back to where we are. Questions, by the way, so far. Please give a thumb up if you're visiting in YouTube. I'm just going to look at the chat quickly here. Yeah, hi, VGT. I'll get to that in a second. I'm just trying to look at some stuff here. What is the EC with number? EC. Oh, these are icebergs. The E is executed. The C is canceled. So that's what this is. These are selling icebergs. The green dots are buy stops. And so you got sell stops, red dots, and then buy iceberg. So these are the icebergs, and they provide tremendous insight. This is absorption. This shows me the seller was absorbed. Who absorbed him? The buy iceberg. You don't always see these because it's the way I have them set. Because I don't like a lot of noise. It might seem there's a lot of noise in this, but For me, I'm a minimalist, so I want the minimum inputs. And for me, the auction is the most important thing because the market is an auction. So I prioritize the volume, and the volume gives us a lot of information. Again, it's all how you use it. So this is too high. We come down. This is a short. So the way it would work is you take your short and you're looking to take this out, the opening swing low. That's why I mark it, because I know that the buyers in this leg have their stops. So the shorts here, down to opening swing low, then trade management. So let's look at the trade management. I don't think I'm going to spend a lot of time with this because you guys have followed the stream. You've seen this a million times, but I want you to see how this might work. So you're going for the opening swing low off this short. Now, in the Trader Lab, we talk a minimum 2-lot configuration, the idea being that you scale to get risk neutral, and then you go from there. Now, in the Trader Lab, we had a lively conversation this morning, and it was about context. Context is the most difficult thing in trading. Context is is there a skew? Is there a edge? One direction versus the other? And the other part of it is, in this kind of context, which is rotational, it is problematic for us as retail traders. Overtrading, FOMO, frustration. We all feel it, by the way. I mean, everybody. So, in fact, I suggested that today is a tremendous day to isolate and review, because this is nightmarish for me, for everybody, because I end up overtrading in it. I end up getting scales taken out or stops, and it's just nasty. But I still don't know right at the moment who's going to take control. I know what happened here. So I know this is potentially the high until it changes, right? I know this is too high because we broke away from it and we're under here. I know that this, if I come back to it, it is a potential target or a short. I actually took a long here. And here's what I did. Now I don't know at this point what's going on, other than I'm in balance. And here's what I know. This is too high. I get VPOC migration. What do I anticipate? If I come here and it's too high, I go down. If I find a low, which I won't know, and this shifts down, then I'm looking for it to do this. It does this, which says to me, going here for a test. I covered my short, I got long, and I scaled ahead of this, and I'm going for out the top because I'm in two-sided trade. I'm just going to tell you right there. I get my scale, and right here, I get VPOC migration. And what you're seeing is this thing moving all around. It's telling us that this thing is a fight. Nobody's in control. So I got long, I got my scale, I got taken out. And I'm going, Now I have VPOC migration here. What do I want to see? Let's look at the logic here. If this is too high, it's going to blow off, right? It's going to go this way. If this is too low, it's going to go this way. If I test this and it's too high, I'm going to go this way. If it shifts up, I'm going to test this, and either it's going to go this way or it's going to go that way. If it goes that way, then this might be too high, and this is now too low. Let's just keep staying with it. This shifts down. What does that say? This is language, guys. Too high, potentially too high. Break low. Now, shorts. Where do I come back? Here. Too high. Too high. Why? Too high? Too high? Retail. Outside edge. Rotational trading. I want to hit myself with a cast iron frying pan. Too high. Too high. Break. Test. Too high. Break. Test. Too high. These are all shorts. If that's your thing. Me, that was my thing. Break. Test. too high. You cannot take trades here. Very dangerous. You need to get outside. Break low. So this is where the madness comes in, because what I'm doing is, and I posted in TraderLab, and there was some debate. Now, here's the thing about TraderLab. There's no right or wrong way. It's all about edge. Now, for me, if I'm getting short, I'm targeting this, and I'm going for this, and after this, I'm just waiting to see what's going to happen. But I am trading shorts because I have a statistic, and I know I'm in balance. So it's problematic because I'm anticipating this kind of thing. So I have to pick a side, and for me, based on this, and there's another piece I have to show you. This is a consolidation up here. There's a micro high volume structure right there. This is called a low volume node here. This is now our current consolidation as it's developing, this whole thing. What's out here? We rejected it. This is like too low, too high, retail, shopping. That's the auction. And if we reject it and the buyers won't pay this price, which came from here and in the microstructure up here, and we fall out, then we start with this thing, then it's saying that's too high. Once I know it's too high and I'm under this and I'm fiddling around, and this is balanced still, I only can take shorts from towards an outside edge or continuation trade short if it changes. So my short target is here and here. So I'm going to keep slamming this thing towards this, and I have to manage my trade. And this is where I don't like this condition. Too high, break, target, value area low. I know there's a trader in TraderLab actually got long here and got a scale, which is, of course, is fine. But where's the opportunity? Is it here or is it short? We had a lively conversation, and I enjoy those, because the only way traders learn, and it's not easy, guys, is to narrate what has happened. That yellow line, too high, sellers. I get to a target, rotation. Where do I come back? I'm still under here. What do I have here? Let's go into a fractal now. And this is such a nasty thing. This is the variable high volume node. I'm going to leave it here. That's why it's a short here. Now, where do I come back? Where's the volume in here? I'm going to mark it for you. Here. Let me do another little trick for you here. Now, I don't anticipate that anybody ought to be thinking about this, because this is hard. And you really got to read this. I don't use indicators. What I'm looking at is I look at volume, because the truth of the market is not a lagging, backwards looking, price-based or derivative-based indicator, though they have their place. In real time, I can see what this is. This is a consolidation, so it's too high, too low, too high, too low, too high, and then it resolves. The volume is right here. You can see it there, right there, and it's in alignment with this. This is too high, remember? Above us, this. So I know that. There's my seller. What does the market tend to do? Come back and check. So right here, teeth chatter, and if I'm flat or holding a position, my stop's got to be over here. Now, this is subject to trade plan. I come back here, I test, I see my buyers, right? And it looks like it's going to the moon. But this doesn't mean it's going to the moon. It means there's buyers, and then what? This is absorption. There's my iceberg. There's my break. I'm here. I can sell against this or manage outside of this. That's all up to your plan. Watch. I break low. Now, I'm trading in fractals. Too high, too high, too high, Right now, this is too high. Too high. See? So there's no precision in this, but look at what I am doing is I am marking out behavior, where it happens. Now, here's the other thing about this. Right here, we had absorption. There's your icebergs and all this. So this is the outside edge. Now, when you're putting your stops, and let's say you're going to use this, I don't put my stop here. I give it a couple ticks. Let me tell you why. There's sellers here. What happens if the buyers mount an attack and we come up here? There's going to be buy stops. And then if the sellers still perceive this as unfair or too expensive, they will use those stops and they will fade the stops, and that will be just an excess and a test. So when you come up here, and remember where it is. There's the line. There's the line. And that came off of volume. There's my buyers. Notice what's going on here. These icebergs, the guys who sold back there are now selling over here. These are the same guys. I mean, not necessarily personally, but the same behavior. So what does it say? Remember, this is language. It is saying that these prices are advantageous for sellers. So you have buy stops coming up, but sellers. So who wins? Do the buyers push the sellers out, or do the sellers that we see in the icebergs consume the buyers? Think of Pac-Man. There's your answer. There's your retracement. So you could be selling against here. You could be selling against here. You could be selling over there. There's absorption. These are all shorts in Trader Lab if it's part of your plan. And there's more. Now we have something. And the next target was this. Overnight low. So the shorts, overnight low. Now at this point, I am out. But there's more. We have another structured trade. Remember, IB high, IB low, 98% probability, past performance, not indicative of future results. You got to vet it. We have a structured trade here for Trader Lab developing traders. And you can extrapolate all this stuff, but this is what it is. When you take this out, you're rejecting everything, maybe, it's always maybe, above it. We break below it here. We have something called the IB continuation trade. Here's your micro volume. Let's just do this together. So this is your consolidation, if you will. And we'll just do it from here. Make it simple. I'm going to mark it. And what I'm marking, so you understand, is you see this here? This is a consolidation, and the volume is there, that little node sticking out. So low volume node, high volume. This is shopping. This is a store. I think of them like stores. The shoppers are here. Oh, it's on sale. The sellers are here. I'm not paying that. Boom, boom, boom. And if it breaks away, then we broke out. Then what can we do? We can come back to here or here. And now the structured trade in the Trader Lab is to sell against this for continuation down lower. So let's look at it. So here's your IB. It's 9:30. Wait a minute. Make sure. Just want to make sure I got the right level. Yeah, I do. Okay. So it does not break until here. When it breaks, you need to try to sell it here. So let's look at how you might do this. So this is your break, and now it's the idea is to get short. This is too high. The ID deal location would be right here against this. So here and here. It didn't get back there. Now, either you take it here. Now let's look. It didn't get back there. Now let's go a little further. So this is your short IB continuation trade. You get your chop and you're looking for this. In here, we have a consolidation also. So, and here's our volume. Two-sided trade. Let's draw another little consolidation here. And again, who knows? This is part of the being clueless. So here to here, volume. Same as this, volume. If it breaks, you want to sell it. It breaks here. We're looking for it to come back up here. I'm getting my chop, and I'm not getting there yet. My volume is there. There's my volume. There's my seller. So this is an optional trade. Let's look at it. Notice where we come back. So if you're waiting, and this is how I will enter a trade. It's a little more advanced because this is where I want to enter. I mean, what I want doesn't have a lot to do with what the market does. I mean, yeah, I want to sell the high and buy the low, except I don't try to because I don't know, So I want to get short here. Want to. My trade is here. But I'm rejecting this, and I don't know in here, okay? If I break high, I'm going to be shorting against in this area because I have a structured trade. What it does is it breaks low. Now I'm going emotionally, oh, I missed this. And those words that we, all that thing, quote, we feel. But what do I know? If I was going to look to sell this and this, I can do the same thing here, this or this. So you could have shorted this with a stop over the top, or shorted this with a stop over the top of the consolidation out here. That's the trade. It's the same trade as up there, except this location. Trader Lab. Now, I had 20 as a target, yesterday's low, and I got one target left down below, which you guys know about, which I already told you, about 55.96-ish, 95, which is this. That's our target, not a trade recommendation. I'm now current. Thank you. You have questions. This is the auction. This is based on using structured trades. In the Trader Lab, there's 60 PDFs of these you can download and reverse engineer. If you're looking for quick, this is not quick. You got to learn. It's a process. And what this is the language. I don't use indicators. What I found is the closest I can get to the market is order flow and volume because they're happening in real time. And also, I'm not going to be trying to pick the bottom. I don't know where it is. And I don't care where it is. What I care about is probabilities. And just like casinos, probabilities, not the outcome of one trade. And also, why was I only on the short side? Because of what the market spoke to me. It's a language. And what is very difficult for traders is to get in alignment with the market. You might come in and go, oh, you see a move up and now you're going to be buying and you're going to be buying dips and you're going to get wiped out. Well, and sometimes you're right. But if you don't understand how market works, you're probably going to be at a disadvantage over time, even though you have winning trades. The randomness of the market lets us think that we actually know how to trade because we all have winning trades. If you had nothing but a dartboard that said buy or sell, you would have winning trades. But it has nothing to do with having a sustainable business. Trader Lab's built on the idea of helping traders build a business. This is the target. Now, so you understand this, and this is all posted in Trader Lab as we were developing. I never know. I don't know what's going there until I know who takes control. And then I don't know what it's going to do either. I know how to manage my trade. I know where my locations are. And I know what's, and I know it's all maybe. That's all I know. If you know you don't know, doesn't that take the focus off of being right and more about being in alignment and accepting the random outcome? So there's your target for me. And now my trade is over. That's it. And by the way, if it keeps going, I believe 55.80. Guys, confirm if 55.80 is an open target. This might be stale. Trader Lab, can you let me know that? Do we have a naked volume point of control around 78-ish? You guys confirm that. And by the way, if you're in YouTube, hope you're getting something out of this. This is Trader Lab. This is based on structured trades that are available to all of you. There is no cost to become part of Trader Lab community. There's a link in the bottom of YouTube. And these streams are available exclusively to Bookmap Discord Trader Lab participants, as well as a library of webinars on this process. 55, 95, 50. Yeah, I'm asking about 55, 80. Is there a naked volume point of control in this area? 78, 80. Might be stale. Stale? Well, this is our target, guys, before we got here. And this is about saying I am, quote, right. I have nothing to do with it. Absolutely. The market can never get here. And if it breaks under here and it tests from here, we're going to look at it. It really depends. I can't see my higher time frame charts at the moment. But this is all on the price map before the market opens. So we know this if you're in Trader Lab. But let me tell you what else. We don't know what the market's going to do, if it's ever going to get here, how, why, anything. So what do? You narrate. And what is all this? You know, you see all this, and I know you guys have indicators. That's all good. But you're being passive. You're not engaged. You're looking at a line. What about this? You know what that says? Do you know what happened here? Do you know what it says right here, right there? What does it say? Let's look at what it says. It says this is too high right here. Microstructure. I'm going to put a little line. Now, it's not a short. Why? There's my target. But what if subject to time frame? Look at the little microstructures. We're going into the microteria here. You know, it's like get your electron microscope out. Let me just mark a couple of these nodes. What I do is I look at all of this in real time and narrate it. Because if I understand, here's what you need to do, in my opinion. And I don't mean that to say you need to do it. It's what I needed to do. And that is understand this. And not just, oh yeah, and it went down. It's why. If you understand why, you can anticipate behavior. If you understand why there's little micro high volume there in relationship to this, which was the last time we left here, this was too low. What do the shoppers do? Let's go back to the store. This might be too low because it was too low last time and we went all the way up and now we checked it. There's a possibility we keep going south. I don't know. It's not my job. You know what my job is? To dance with the market, to read the language, to see the selling, to see that this was too high in the fractal. I come over here. This is a microstructure. I break. I find a buyer here. So I have a seller here. I got a buyer here. Let's see what we do. Now, what do you do with this? Well, I'm not a scalper. I'm not saying you. I have no opinion except for myself. My broker loves it. I used to get roses from my broker in gift baskets. So I haven't gotten to roses lately. Occasionally get a gift basket. But this is too high in the microstructure. You can see it right there. This little fractal with the absorption and the selling icebergs tells me that's why I'm seeing absorption what does your indicator tell you? I think it's a little late. Then I see the sellers. I see we rotate right here. It's a consolidation. What happened here? The buyers were absorbed. Icebergs. Break low. I get some buyers here. A buying iceberg. What happens here? Buyers. Where do I come back? Here. I break. My buyers are trying to get this thing, but the sellers are still overwhelming them. I break here. Here's volume. I break. Support is here. Target. Now what? And these are in shorts. What I'm sharing with you is how to narrate the behavior. And if you're using these, I use them for triggers, trade management. And then when I'm in alignment with the higher time frame, maybe, which is not my trade for today, in other conditions, this would be a long for me. But it's not today. What I'm saying is, if I know what created this, I can anticipate the following. It might be too low, and I'll get a bounce. That's why it's a target. I cannot take longs, even if this is the low of the day, and we end up taking, coming all the way back here. My plan doesn't allow me to take a long. My plan says shorts only. So if this comes and squeezes everybody out, I'll just sit here and watch it, work on my crochet. If this is too high based on the fractal, then I can rotate down to here. Because this might be too high and this might be too low. I have no trades. I'm not calling trades. I'm saying is I am reading behavior. In the Trader Lab, I share how to do this. Now, I know it probably looks busy and it looks complicated and it requires you actually not be a passive participant, but actively participate. So it does require work. However, if I understand this, does that give me the opportunity when I break out of this consolidation and return to actually short it if I had an open target? You see what I'm saying? Can I trade this? Yes. Am I going to? No. Why? I've been short since, which trade is better? Well, for me, I just don't want to be that active. Just too much work. I like this short. What do you think of this one? That's my last trade to there. That's me, not you. And along the way, I can trade in and out of my positions. I can add and scale all by using the fractals. And I'm not saying you should. I'm saying you could if you develop an understanding of this. Now, the other part of this is, guys, there's no shortcut. This is competitive sport, if you will. And what it really is gaming. It is like casinos. And to understand casinos is to understand trading. Casinos just play games, if you will, and for us, it's structured trades that have a statistical edge. And that's why I read you the statistics most mornings and also explain why this is a target. It's all statistical. Now, I don't know what the probability is we'll get here. I do know we might, and I do know once the trend gets established that this was the last location that was too low last time we were here. And what does the market tend to do? Checks prices in all fractals and time frames. So my trade plan is about structured trades that have an edge. And once I get in alignment, then I just follow the yellow brick road. And I take stops, I make errors, and there are days I hit my loss limit because I'm not in alignment or I'm not trading well. My brain is in Twinkie land and I'm just not in a flow. And if anybody tells you different, they're just full of it. Because this is the real world of being human, being in a random, uncertain environment. It is very difficult to get yourself together to operate in an environment that's foreign to what we're typically operating in, which is the outside world. The rules of the outside world do not apply here. In fact, to succeed here, you have to suspend and fight against the rules of the outside world. Your emotional stimulus and response to fear, looking for certainty, and most traders embark on this voyage of certainty where it doesn't exist. So the casinos accept there's no certainty. So they only play games that have an edge that favors them, and they accept the random distribution of outcomes. That's why we put trades on, we take stops. It's random. If we have an edge over that specific trade that we have vetted, which means we know it has an edge, over a large sample size, just like the casinos, we extract dollars from the other participants. That's our business, not predicting. I can't predict anything. So if you take your mind away from needing to be right, which is emotional wiring, approval, and you take your mind away from all the effort going into predicting what will happen next, and you put your energy into learning market mechanics and potential alignment, and then only deploying trades that meet specific qualifications, over time, does that give you an edge over other traders who are just, making it up, impulsing, and playing a video game? What do you think? That's Trader Lab. Good question, Vansley or Garrett. The question is, in Trader Lab, does the open location trigger a mean reversion plan, or is it the participant behavior around this balance after the open? It's both. So the open, before the open, I suggested balance, patience. If you go back in the chat, you'll see I posted this before the RTH open. That's based on where we were opening. Then you have to see who takes control. We got our buyers first. But, and the thing I mentioned at the top of the stream, we got our buyers, but this was an obstacle. It was yesterday's retail price. I'm opening in a fair area. I'm anticipating this. And this was the retail price in the intermediate time frame. So that's why I said patience, balance. I'm not saying I wouldn't take a long off the open, because that was a structured trade. But I had to be conscious of the obstacle, which was this thing right here. I mean, and if you go back and look at it, the open, wherever, there it is. Here, let me show you. This is the obstacle. And support, let me just come back. I want you to see this. This is so important. Now, those of you in YouTube, before the market opens, we know this is a high probability. Well, that's a high probability. But the most important aspect, two pieces. This is balance in the intermediate time frame. In other words, retail. This is where most of the volume is over the consolidation we've been in. This was yesterday's retail price. ETH retail price right there. So I know if I open, come down, and test this ETH, or even test this, that I could see buyers, and this is my obstacle. What I do is I open, I just check right here, and then I blast off. I got to get through here. I have to execute with enough range to scale here. And the reason I didn't get long, as you know, is it was so fast. I got a setup, but I have this. When I put a trade on, I have specific requirements. They are range to obstacle. Suppose this is too high. So I have to scale here, and then that's it. So if it doesn't meet my parameters, I cannot take the trade. That's in my trade plan. And there are times I don't take a trade, and the thing goes up 30 points. And I have emotional response to it. But I have found over thousands of trades, and doing this going on 45 years, that one trade doesn't mean anything. What matters is doing the right thing to stay in business. Otherwise, you get rewarded for not doing what's called the right thing, which means your plan. You're on your way out of business. The door just hasn't hit you in the you-know-where yet, because you'll now have been rewarded for breaking or not following your plan. What that does is your mind now is not going to feel there's any reason, because of the intermittent rewards for breaking your plan, and also the dopamine and the approval that it's okay to break your plan. I've seen over the years I've been in this business a lot of good people and traders that had the potential to actually make a career out of this fail and go out of business and have to go back to some job that they did not want to be at because of economics and running out of time. Remember, I would not take this long, but this is a long for counter trend traders. Me, I don't do it, and I did mention it, but it's not saying I'm right. It's because if we break under here, then it's a different behavior. Why did the market reverse here? Here's the thing. This is what the auction is all about. And it's not predicting, it's understanding. How about understanding how the market works, not predicting? If you cannot predict, then your job is to anticipate in order to participate. Now, is this the low of the day? Not important. What's important is my trade is over. And this can do whatever it wants. I'm not here personally for action. I'm just telling you just a philosophy. I've been trading for so long and taking so many trades. I found for me less equals more because the dollars are not made keeping busy because I'm sitting here. I'm not an hourly worker. I'm here to catch these large rotations. And then if I have a target like this and I have confidence in what I do, accepting it's random, I will add and scale. This is more advanced, but I will be using fractals to actually trade inside of the higher time frame. I'm just talking about me. I'm not saying anybody should do it. But you could have just thrown a 2-lot on back at the place where I got short and just target this and stay outside of the noise. Now this is called VPOC migration. This is very important. Let's watch this. Now you saw what happened before. This is a very important event. If we rotate off of this, we can have a little bit more retracement, maybe back out here, or we break here, then we can come back and test this. Let's just see. Now, I'm not calling trades. Remember, I don't know. I'm as clueless as everybody else. So I'm not seeing, right now, we're just watching this structure. Let's watch the structure. Micro high volume is here. Now, I'm seeing sellers right here. I don't call trades. I take stops. You don't need me to help you take a stop. You probably do it as well as me. Maybe not as often as I do. I have a little different philosophy. If I get in and I don't see what I want to see, I just get out. I mean, I'm not concerned about it. I'm concerned about probing and being in the right location. I'm hearing some buyers. So we're going to watch this. Very important. I got to go over here and just see what's on over here. So I got this. There's going to be stops here. Outside edges up here. So, okay, let's watch. So this is an area to observe, and it is important. In the meantime, you guys have questions, please post them. Ben, are you asking, is there a stat on how often we close below IB3? Is that a 3? Or is close? I can't tell you how often we close below it because the market can change. I don't keep track of that. In other words, how often are we going to close below the first hour's low? I don't track it. There might be others who do, but that doesn't. I stay more in this because let's say we know there's a probability we're going to close below the IB low. Well, okay. IB low is all the way wherever it is. I think I lost it. Yeah, there it is. As far as it goes for me, I think there's reasonable shot we'll close below here, but that doesn't change what I do. This was what's important to me. So In here, it can do anything. Now, here's the other thing it can do. I know if I come up here, right in here, I am looking outside of this for potential shorts to come back here. Here's I'll tell you some Trader Lab structured trades. And I think some of them are a reach. There's my resistance, by the way. Mean reversion. What this is called is the mean or the mode, but let's call it mean reversion. And if we come outside, the nature of the market now is to go into rotation with a downward skew. So for me, and it's not a recommendation because if things change, I change. I only have shorts for today, and I'd be looking outside somewhere. Here's an outside edge of a consolidation. Let's mark it. This is where it tapers off. It's called a low volume node. I'm bracketing a developing time frame, or I consider it somewhat of a higher time frame for the day. This is where the stops are going to be out here. And what creates low volume is this rip. So it didn't auction. So then we rotated up, found our sellers, outside edge right here, and then we went down to our target there. Now, what we can do is we can come back outside into this low volume area and squeeze these guys out, or not, So for me, at the moment, it's going to be outside in trading back to this. So it's rotational. This is a trade plan inside of a plan. This is outside in trading. And you need to get outside far enough to have range to be able to get back to here. I hope that makes sense. It's called mean reversion. So what we know is the market is short. We have hit our primary target. This might be the low of the day. Doesn't matter. What matters is if I can rotate outside to an edge and I can come back here and then rotate back out here. So this is called mean reversion. So I don't have any longs. If you're counter trend trader and you can wear a helmet, this could have been a long. It's not a long for me. It is a target for me. I'm just saying, different traders, up to your plan. If you're in Trader Lab, you'd understand why this is important as a target, and maybe it's the low of the day, maybe not, doesn't matter. Now, what's next? Outside in. Now, let me give you some more. Remember, that's resistance. I can't trade this, by the way. Why? I can't trade. There's no range. Now, if I come out here, I can look at it, test yesterday's low. There's going to be stops right in here, and this is my outside edge. If I come out here, my plan would be to take this, because now I got range. I can get scaled, put a few burgers in the bucket, and then hold a runner for, and all I'm looking for now is this kind of thing. So I can trade this, or not, it doesn't matter if it has range. This is resistance. I can't trade this. So I hope that makes sense. And I hope that answered your question, Garrett. Keith, I would not take a long unless it's in my plan, the counter trend trade, and it would have been out of here. And I won't take it because what's the point? I think when I, like here, should we take a long here because it's a target? All it might have done was rotated and then drop through, which of course it could. I don't have a long in my plan. This could be the low of the day, right? I can't answer what it is. I know the trend is down. I know I took out the first hour's high. I know I took out yesterday's low. And I know I got this. So that's what I know. So would I take a long? I would not. I want to take shorts unless something changes. So counter rotations for me are opportunities to sell it. Think of it this way too. There's an advancing army and a retreating army. Inside of the battle, if you want to think of it that way, there's counterattacks. Those are counter rotations. Is this a trend change or is this a counter rotation? And now there's buy stops. Now watch this right here. Right here, we want to watch this, this, and this right here. Just think what might happen right here. Think about it. We have our volume is in here, highest volume for the day. This is the current retail price. What does it tend to do? What's too high? What's too low? Retail. And this is called mean reversion. So this is very important. If we push off from here, or do we squeeze? This is not a good place to trade. The place to be thinking about is the outside edges. This is the same thing I talked about on the open. Potential for two-sided trade or mean reversion. All we've done is now this is the fair price, and we're looking to return to it from outside. We know there's an outside edge here, so we can come out here. This would be an area to observe, not a recommendation. We don't know how far out. This is the hard part about mean reversion. And we know the other area is down here because this is too low and this is too low. And we may still test this later in the day or not. See, this is the auction. Now, what do you do about all this? It's all done outside of trading hours. You have a trade plan. If you were in Trader Lab, you would know this is not where you trade. You would know we have now gone into balance. And you would know that you do not trade here. You would be looking outside somewhere. This is the joy, because we don't know where it is. And we always know in hindsight. I know this is high volume, micro high volume. And I can look over here at the developing micro structure for triggers. That's what I know. And I'm doing it right now. You see that little structure? Micro high volume is right there where that node is. Let's watch what happens. Do I have enough range? No, I don't. And the better entry is on a little retracement. Well, we'll watch it. But remember where the stops are. They're out here. So this is a micro trigger development. But this is where you got to go. I can't do that. And I'll tell you why I can't do it. Because when I put a trade on, my risk is pretty consistent. Not always. It's less. I try to, 3 points is a maximum. Now, if you were looking at this, I mean, if you took a short here, your stop could be right, here or there. I wouldn't take a short here. Where am I going? I can't do it. So I have no trade. But I want you to see the structure. And where am I? Anybody notice we're at yesterday's low? And what else? People do trail their stops here. I'm at a high volume area, and now I have micro high volume right here. And these are not trade recommendations. I'm just showing you structure. I anticipate, remember, what do I anticipate? Squeeze. And I don't know where that'll go or if it'll go, and it could just keep going. There's another trade out here, by the way. I want to let you guys know about that. It's out here, mid or VWAP back here, or just out here back here. Not a recommendation. I got to show you something else, a couple other little things. Remember, verify your subscription. There's going to be, I'm going to be doing streaming in the Bookmap Discord, Trader Lab exclusively. I will be streaming. It'll be additional streaming for Bookmap Discord Trader Lab participants. You need to verify if you have a subscription. Also, if you don't have a subscription, you can get a free subscription. Ultimately, you're going to be needing a subscription, and there's a free digital version so you can play with it in order to participate and attend live exclusive Discord subscriber streams. And I'm going to be doing that in the Bookmap Discord Trader Lab community. There's no cost to join the Trader Lab or to download the digital version. And it's a great way for you to kind of see order flow, see how it works, and follow this stream if you find it interesting and useful as it continues in the Bookmap Discord Trader Lab chat. There's a link in the bottom of YouTube if you want to visit the Trader Lab. By the way, you could download 60 PDFs of these structured trades, which are what I'm kind of doing here. I'm not a vendor. There's no cost for this. So you can download these. There's a library of webinars that are exclusive to the Bookmap Discord Trader Lab. So you can look at this and the community. Let's go back to what's going on here. And please give a thumb up if you're visiting in YouTube. Remember, these streams are available exclusively, and this is where we're looking, remember? So let's just watch it. I do not call trades. What do I know? I know what might happen, and I can determine where it might happen. That's the best you got. Now, this is the outside edge. There's going to be stops out in this area because it's a swing high. Stops are always retail traders. You got to write this down. Think like a retail trader. Don't act like one. We know the outcome for most retail traders. And I know we all think we're special and we're going to get a different outcome. If we're doing what they do, it might not be realistic. Every tool you have in your trading toolbox has been gone through by everybody else on the planet. There's no mix and match and find what everybody else hasn't done. I'm just going to say you can do that if you choose to. Everybody else before you who's walked in your shoes has done it. So the question becomes, are you just going to do what everybody else does? But are you anticipating or expecting a different outcome? Or maybe learn from what they've done and what you've done. Outside edge. Location, not a recommendation. Let's watch. What I do now is I'm watching the behavior right here. I have alignment. I have an outside edge, and I'm looking for mean reversion, which is to here. Now, it's not a recommendation. This is my least favorite condition because with mean reversion, and we laugh in the Trader Lab, it's not so laughable, but you have to have humor, is where's the outside edge? Is this the outside edge? Was that the outside edge? Is this the outside edge? Is this the outside edge? But I have absorption. This is order flow now. I have my buyers here. My buyers are here. Why aren't we going up? I got a seller here. Resistance, resistance, stop is here if it was a trade. And there's where we're going. Maybe. Not a recommendation. Observe it. Guys, you got your whole life to trade if you don't blow yourself out. You need to learn to anticipate where behavior might take place, what it might look like, and where these locations might be. Then let's talk about this being a potential trigger. Where does this trade fail? If you triggered right here, it would fail above here. And if you took a stop, then you're just going to move yourself further outside to where this is, which is the ideal location. But it doesn't have to ever get there. So let's just watch. I've only got 2 minutes left. Please give a thumb up in YouTube if you're getting some value from Trader Lab. There's a link in the bottom of YouTube. You're all invited to visit the Trader Lab. There's no cost. Come over there. If you're a subscriber, verify your subscription so you can have access to additional streaming that'll be starting. In the Trader Lab, I will be doing exclusive streaming for Trader Lab participants. You do need a subscription. You can get a free subscription. So I think that's fair. You can again see the product, see how order flow might help you. Now there's no holy grail, guys. What there is edge. And can you differentiate what other traders are doing by doing something different and develop the confidence to wait for a trade that has a statistical edge? There's a battle right here. I'm running out of time. See, you see the behavior here? That's why this is an area of a potential trigger, not a recommendation. Remember, If it breaks high, we go up further out. This is the problem or challenge with mean reversion. If we break low and we don't clean these guys out, and it's got to be a couple ticks over here, not right there, we're going there. If we come outside and squeeze further, then we're looking further outside. And these are not trade recommendations. Hope you got something out of this, guys. Please give a thumb up if you're in YouTube. This is Trader Lab. This is based on using a high-tier order flow tool like Bookmap. That's what helps me see what's happening here for a potential short. And it's not a recommendation. You got to know what you're doing, and you got to be prepared to pay to play, take stops, and also understand what's happening to effectively manage your trade and where you would exit, where you would trigger. All of this is available in the Bookmap Discord Trader Lab chat. There's that link in the bottom of YouTube. If you want to visit Trader Lab, access the 60 PDFs of structured trades, library of webinars, and, of course, the community. And there is no cost. Thanks, everybody. Please give a thumb up in YouTube. It helps the stream. I look forward to seeing you guys. Remember, Monday is a holiday in the U.S. It's called Labor Day. That means we all better get to work, I guess. And I look forward to seeing you guys tomorrow. Thanks again. And don't forget to thumb up on your way out. Or if you're in YouTube, click that link if you want to visit the Bookmap Discord Trader Lab and take advantage of all those resources. And if you are a Bookmap subscriber, be sure to confirm your Bookmap subscription address and your Discord email address and emails. And if you're not a Bookmap subscriber, you can access bookmap.com, download the free digital version, and then you too will be a Bookmap subscriber. Thanks again, guys. Look forward to seeing you soon.